The stock market has been a roller coaster over the past month, but for most of the year, Wall Street has caused major headaches for investors and their portfolios. Market volatility, like we have seen, can cause some major anxiety. But if you're a long-term investor, you must remember the plan and see through the rubble on how this could be a solid long-term buying opportunity. We have turned the page on yet another month, and we are now a third of the way through 2022. Based on how the stock market has performed, that might be a good thing because 2022 has been trash for many portfolios. Cash has actually been king thus far. That does not mean we are just going to stick around on the sidelines. Remember, as a long-term investor, I am always looking for great opportunities to invest in high-quality stocks at a great price. Do not be confused into thinking that rising interest rates are bad for dividend stocks. Dividend stocks can perform well in any economic backdrop. For example, ask the ultra growth investor right now how their stock portfolio is doing right now, considering many ultra growth stocks have been cut in half or more over the past 4 months. Again, it is all about diversification when it comes to investing in the stock market. In today's video, we're going to be taking a look at 3 high quality dividend stocks for you to consider buying in the month of May. As a disclaimer, I have actually added to all 3 of these positions in recent weeks. So I am not just another YouTuber here blurting out stock ideas. I'm actually putting my money where my mouth is. Does this mean that my stock predictions will actually work out? Yes. Well, at least I'd like to think so. But again, I am not a financial advisor, so make sure that you perform your due diligence before investing in any stock mentioned in today's video, and do not take this as financial advice. All right, let's dive into the video. Hey everyone, if you are looking for a great new investing platform, especially for those of you that are long-term minded investors, then definitely check out M1 Finance. I'll drop a link in the description down below where if you sign up for a new account at M1 Finance, they will give you some free money just for signing up. Also, before we jump in, do me a huge favor and hit that like button, as that is huge for the growth of this channel moving forward. I put this content out for free, and all I'm asking for in return is just a little click of that like button down below, as I really appreciate it. All right, without further ado, let's get started. The first dividend stock to consider for the month of May is Microsoft Corporation, stock ticker MSFT. There are not many stocks immune to the market-wide sell-off we have seen in 2022. Even mega-cap technology stocks, which have been a place of safety for investors over the years, are not showing immunity to this market-wide sell-off. In fact, Microsoft shares are actually down 18.6% from their 52-week highs. On the year, shares are down 15%. The company recently reported their Q3 earnings last week that beat on both the top and bottom line. They reported earnings per share of $2.22, with analysts expecting $2.19. Revenue came in at $49.4 billion, which was growth of 18.5% year over year, and analysts were expecting $49 billion flat. Cloud revenue came in at $19.1 billion, growing 26% over the year. Dan Ives, who is a notable technology analyst, has a $340 price target on shares of Microsoft, and he called the quarter, and more importantly its guidance on cloud, one for the ages. Ives noted that cloud and cybersecurity continue to see massive growth. The company gave strong cloud computing guidance, which Dan Ives just noted to, which had been an area of concern over the past few quarters. Investors were concerned about slowing growth in these major categories. But as we see in the new guidance, it shows that cloud is not slowing down anytime soon. This past week, Microsoft shareholders voted on the pending acquisition of Activision Blizzard, and the vote returned a 98% approval rating. The deal is expected to close in the summer of 2023. Shares of Microsoft currently trade at a forward price-to-earnings multiple of 29.4 times. And when looking at this fast graphs chart you see here on the screen, over the past few years, Microsoft has traded at a multiple of roughly 30.7 times, meaning shares as they currently trade may be slightly undervalued, especially given the growth we are seeing in both cloud and cybersecurity. Looking at this chart, which was compiled as of the end of 2021, you can see that Amazon's AWS has a big lead in the cloud space, but Microsoft's Azure is closing the gap. Of the $180 billion cloud market out there, Amazon, Microsoft, and Google make up the lion's share at roughly 64% of the total market. The second dividend stock for you to consider in the month of May is Medical Properties Trust, stock ticker MPW. Medical Properties Trust hails from the REIT sector, the healthcare REIT sector. This company is a pure play hospital REIT and one of the largest hospital landlords in the world today. This pure play hospital REIT has a wide moat and a very high barrier of entry. Hospitals are obviously an area of need, and Medical Properties Trust is one of the largest landlords in the world, with 440 properties in 10 countries with 53 different operators. MPW is a triple net lease REIT, and if you've seen any of my previous REIT videos, you know that a triple net lease REIT transfers many of those typical landlord costs such as property taxes, insurance, tenant improvements, maintenance, all over to the tenants themselves. The company also has very long-term leases, which makes them very safe in terms of an investment. They have a weighted average lease well over 10 years, with over 91% of the company's base rent has leases that expire after 2031. Looking at this fast graphs chart, it shows that the REIT has traded close to an average FFO multiple. Again, remember with REITs, we do not use EPS. Instead, we use FFO or AFFO. And Medical Properties Trust has been trading at an FFO multiple of 13 times on average over the past few years. However, when we look at the current valuation, shares of MPW are trading hands at a FFO multiple below 10 times. MPW currently sports a dividend yield of 6.3%, which is very generous, but that is part of the equation we get when we see a sell-off like we've seen with MPW. Dividend yield has an inverse relationship with share price, and with shares down 23% year to date, you're not only getting the opportunity to invest in a quality REIT at a great price, but you're also getting a great dividend yield. The third dividend stock to consider in the month of May is Visa, stock ticker V. Visa is a stock that I have mentioned before, and actually it was one of my top 10 dividend stocks for 2022. And the reason being is that over the past 18 months, we have had all sorts of restrictions, and the demand for travel and the demand for consumers to get out, not just here in the US, but all over the globe. The pent-up demand is huge right now, and we are seeing that in earnings from different travel companies. For example, United Airlines CEO Scott Kirby was quoted on their earnings call discussing the travel demand. United Airlines has seen major demand and saying that he has never seen a hockey stick-like increase in demand like he is seeing right now in his entire career, which bodes well for the summer months because the airlines have a unique vision into the future. Visa shares are currently down 4.5% on the year. The company did recently report their Q2 earnings that saw strong growth numbers from both consumer spending and travel, which is an area I covered when discussing this stock. Again, there is huge pent-up demand for travel, and we saw that taking shape here in the beginning of spring, and that has continued through April. Just looking at TSA checkpoint inspections, those have been increasing at a rapid pace through the month of March and now continuing in through the month of April. Travel is definitely a tailwind for the credit card companies. So when companies like United Airlines, Delta, American Airlines discuss this pent-up demand that they are seeing, this bodes very well for a fintech stock like Visa. In Q2, the company saw revenues increase 25% with earnings per share up 30%. Some of the key business drivers were payment volumes were up 17%, cross-border volumes were up 38%, and processed transactions as a whole were up 19%. The company has also seen good traction in their Visa Direct platform, which makes it very easy for people making online purchases to simply sign into their Visa account to make that purchase online. In addition to improving economics, the company is also known for having very strong dividend growth over the years. The company currently sports a 5-year dividend growth rate of 18%. Analysts currently rate shares of Visa a strong buy, with an average price target of $273.60. Looking at this fast graphs chart, you can see that over the past few years, shares of Visa have traded at an earnings multiple of 35.3 times. And right now, on a forward-looking basis, shares of Visa trade at 29.8 times. And considering the robust demand that we are seeing and are expecting through the summer months, this could be a great time to add shares of Visa to your portfolio. All three of these dividend stocks are great companies to consider here in the month of May. You have a mega tech company that continues to grow at a strong pace in Microsoft. They're seeing strong growth still in cloud. They're seeing strong growth in cybersecurity, which is a major focus for many companies out there. Next, we have the Medical Properties Trust, which is a pure play hospital landlord or hospital REIT. This company is trading at a very low valuation right now, and it comes with a very high yield. So it could be a great time for long-term investors to get in right now and have a great yield on cost over the years. And lastly, we discussed Visa, which is just enjoying that travel demand wave that we are seeing right now all over the country. Now, yes, Russia is going to have some headwinds for the company, but they don't expect that to have huge impact. And the travel elsewhere in Europe and just here in the US alone is massive. So we expect those volumes to continue to rise here in the next quarter and into the summer months moving forward. So definitely take a look at all three of these high quality companies that are paying unique dividends. Microsoft and Visa are going to be lower yields but higher growth opportunities, and Medical Properties Trust is going to be less of that growth opportunity but higher yield. So a little bit of mix there in the three companies that we discussed here for the month of May. Let me know down in the comments section down below what you think of these companies, and also let me know what stocks you are buying right now. If there's one piece of advice that I could give you, not financial advice, but if there's one piece of advice that I can give you as an investor, is to not let emotions control your investing. I know it can be tough right now with volatility at very high rates right now and fear levels high with a lot of the uncertainty surrounding the market. But the key is to invest and to perform your due diligence. Look for opportunities in high quality companies. High quality companies that could pay a dividend, have strong cash flows, and have strong growth perspectives moving forward as the economy gets rolling yet again. I hope you enjoyed the video, and again, if you have not done so, please hit that like button, as that is huge for the growth of our channel. And also, if you love dividend stocks and enjoy hearing about dividend content, then consider subscribing so you are notified anytime we drop a new video. And with that being said, we will see you next time. Take care.